Okay, this video is on pot, and here's what we did on this one today. We entered in. My alert went off. I had an alert somewhere right around $17. It closed at $17.50, just up just a hair. The alert went off, so we decided to enter it, and I'll show you why and what some of the options were on it. For some weeks, you can see there's been some base here for 1, 2, 3, 4, 5, for 6 weeks. Basically, there's been some decent base. You know, I would never try a play catching a falling knife, doing it on just 1 or 2 candles. If some of these start holding up a little bit in this area, started holding up really good right around this $15, $16, and I actually waited for it to try and break out a little bit before we went into it. Might be a little early on the weekly, but I'll show you why, and I'll show you the price of the options and whatnot. On the weekly, anyways, we're starting to turn up on the RSI, and the MACD is actually above the zero line, and it's got some green going on to it right now, and we broke out a little bit. We've got one little area here at these the first moving average here, the 20-day moving average, which puts it at about 18.5. And then the real next area comes up to the old area here, which is about almost 22. And then from there on up, kind of gets into this area here, which is this last. And I'll show you when we stretch out the chart here. This is at 28. Seems kind of a little bit of a long run, but let me show you what we're looking at here. And this gives you a whole better perspective. If you can see, this is kind of where it started originally. Its breakout in 2007 had a really some consolidation here, and then just an absolute huge run for a good year and a half, 2 years, and then it came right back down to this area here, which immediately took off as support, ran up for the next year, and then started to continually move up, and then for the last 3 or 4 years, 1, 2, 3, 4 years, it faded all the way back down quite a ways. So now we've had consolidation in this area of around $15.5, $16 or so, which comes back to this area and this area for quite some years ago. And so now, even if it's just a bounce, you can kind of see what we're looking at here. Not looking at a lot. This is about, let me run this about halfway, extend to the left. If you could see right through these old candles here where it kind of, this was the extreme shoot to the downside, and then a lot of this for many weeks in this area here, which is about $22. So this let's see here, let me open up the chart just a little bit better. So if we can just get a nice run from here up into maybe about the $22 area, that would be a really nice little gain for something that's priced really reasonable. So it's kind of worth the risk here to go in, and obviously if it gets below, down here back into the 15.5, 16, well, then you just stop out. Let's look at the options on it. And I think we went with April's, let's see here, no, this is 43's weeklies, maybe it was March, let's see what we looked at, March 18s, okay, they had good volume on the March 18s, was decent, price is decent, for the 18 calls, you're looking at 49 cents. Let's go out to the April 16s. Well, kind of in the money, just a hair in the money, are $1.10 for 43 days, and 87 cents at 17.5, which is not too bad. So that doesn't look too bad either. The pricing is pretty good on there, and obviously because the stock is so cheap. But the spread isn't bad. You're looking at on these just a nickel spread, so it's not too bad for the reward. So if you're in at, let's say, worst case scenario is if you go into the Aprils or something and you're in at a buck, and we get a run from 17 to 22, well, then there's your good reward there. You're at least, I like to always shoot for at least a minimum of 3 times my money for what I'm risking, and then something with a decent spread that's not too bad. So you're looking at a nickel or 7-cent spread on the options, which are not bad at all, and you're let's say 3 to 5 times your money, depending on how quick and if it can move all the way back to this $22 area. Even if we just get above this 19 or into the 20s, you're still at 3 times. You'll still be at 3 times your investment on those options. So everything's looking pretty good on the weekly. Let's go to the daily so we can look a little bit more just to see. And this is what actually set off my alert here, as you can see, that it broke above the 50-day on the 50-day moving average. It broke just above it today, and with not a huge run above it. Yesterday was actually the big run, but I don't want to trust it. I want some more follow through, so I actually waited today, and then I saw that we had my alert went off that it was actually above there. So if we get below, back down to 16, that's obviously that's going to be kind of a no-go on it. But I think that the risk versus the reward is really nice setting up to this, and if you can get a move almost close to where this 200-day moving average, right around $22 in the next month or so, this could be a really, really nice play, and it's priced just right. So anyways, good luck to you on this one. I like the setup here, and I like the risk versus reward, so take a look and see what you think.